Begin. Hello, everyone. Welcome to the Gyan Station, the virtual platform, and All India Jain Chartered Accountant. Our today's webinar is on Vivad se Vishwas, an opportunity to resolve the direct tax disputes. This is an important webinar. This scheme was announced in 2020 to settle pending disputes relating to direct taxes. It is an attempt to release 9.32 trillion as on 30th November 2019, blocked in approximately 4,83,000 appeals pending at various appellate forums. Purpose of the scheme: the main purpose of the scheme is to reduce pending litigations, generate revenues for the government, get relief from pending disputes by paying disputed tax, and get waiver from payment of interest and penalty, and also get immunity from prosecution. Eligibility of the scheme. This scheme applies to all appeals, writ petition, and arbitration filed by taxpayer or department before 31st of January 2020 or appellate orders. The cases pending before dispute resolution panel as or on 31st of January 2020, cases where assessees has filed revision application under section 263 on or before 31st of January 20, and dispute where payment has already been made shall also be eligible for this scheme. So in today's webinar, we have our galaxy of panelists to enlighten us on this. We have CA Shantilalji Kochaji, Apex President, JCF, CA Rajesh Selotji, President, JCF Malwa, CA Jayesh Kalaji, Vice President, JCF, speaker of our today's webinar, CA Piyush Chhajed, and we also have our friend CA Niket Thakkar, JCF Mumbai, and CA Sukriti Ambol, Financial Mental, JCF Malwa, presently in Gurgaon, and all our participants. I welcome you all in today's webinar. Let me now I now invite CA Shantilalji Kochar to give a welcome speech to all our participants. He is the mentor and guide and torchbearer of JCF and helped in establishing chapters across India of Jain Chartered Accountant Federations, and also director of Jain International Organization. Over to you, sir.
Thank you, Dipti. On behalf of Jain Chartered Accountant and Gyan Station, I welcome you all, especially all the panelists and the dignitaries, those who are attending this webinar on Vivad se Vishwas. It's a very hot topic as on today, because the last date, which is, unless it is extended, is going to be 31st of December. And lot of complications we are facing while uploading the form. So it will be a good subject to study and attend the webinar, and where the Piyush Chhajed is there, he is going to explain a lot of things, and I hope that all the uh, attendees will enjoy this talk. I'll also welcome Jayesh Kala, our Vice President and member of the WIRC, and Rajesh Sailot also, who is the chapter President of Malwa chapter. And thank you very much for giving me this opportunity. Once again, I welcome you all and hope that you will enjoy this webinar. Thank you. Over to Preeti.
Thank you, sir. Thank you, sir, for this wonderful words. And we are highly obliged and honored with your presence. Now, I request CA Niket Thakkar to introduce our Vice President, CA Jayesh Kalaji. Over to you, Niket.
A very good afternoon to one and all. Now, many of us want to see people who are not only work for themselves, but also work for various other committees and organizations. And on top of it, we also want to see people who still find time to mentor young professionals and students. So today we are fortunate enough to have one such person among us, Mr. C.A. Jayesh Kala. He is an eminent personality, currently a regional council member of WIRC. He has also been a chairman at Vikasa, which is a CA student association having almost 7 lakh CA students. He's also been associated in assisting various CAs to develop their own practices. He has been a mentor and motivating various CA students for achieving their goals. Now, on the other hand, he's also a global director of Jain International Organization. And also, He has been entrusted with the opportunity of being a chairman of Mudra project initiated by Jain International Organization. He is also vice president of Jain Chartered Accountants Federation. On professional front, he is a managing partner of J. Kala and Associates Chartered Accountants, having 21 years of experience, which is also spread over 7 cities across the country. Now, his shelf includes some an interesting award, which is Excellence as a Professional Award, which was conferred to him by French European Indian Organization and also World News Network at Paris at a function of Paris Appreciation Awards 2017. He has also been conferred Bharat Jyoti Award by Indian International Friendship Society. Sir has been a thorough gentleman and also humble and down to earth, who believes in respecting Guru Maharaj, Mataji, parents, and seniors. So I would like CA Jayesh Kalaji to address our crowd. Over to you, sir.
Thank you, Niket. Thank you for your very kind words. Uh, and a lovely concept designed by Dipti ji. Respected Kocherji, our national president for Jain Chartered Accountant Federation, respected Piyush ji, renowned tax expert, and for me especially, he's a Bible for income tax. Whenever I have any sort of problems, I only dial his number, and he's so well versed with the subject that he give instant reply. Not even he says कि नहीं मैं देख के बताता हूँ. Whatever question is given to him, he immediately on the phone he replies कि this is the answer. So we are indeed fortunate that on this very important topic of Vivad se Vishwas, we have Piyush ji with us. He is also the contributor to the publication on Vivad se Vishwas, which has been brought out by WIRC. So it will be really pleasurable and learning session for all the participants over here. Dipti ji has done a wonderful conceptualize this program under the aegis of Jain Chartered Account Federation and Gyan Station, and we wish her luck and all the best for the future, and we are indeed with her in all her endeavors. Friends, this topic is really very interesting on Vivad se Vishwas, and I have gone through the publication, gone through the entire scheme which has been designed by the department. And if there is indeed a dispute which cannot be, or which is very difficult to be sorted out at the department, people should definitely opt for it. Definitely Piyush ji will be the right person to guide on the topic. With this, I once again congratulate Dipti ji for the wonderful arrangement, wonderful program what she is doing, and thanks a lot. And it will be a really wonderful session with Piyush ji. Thank you very much.
Thank you, sir, for this wonderful words, and these are really inspiring and motivating for me especially. Thank you, and thank you for being supportive. And this event is possible because of all the support of Jayesh Kala sir. We got this important webinar. 31st December 20 is the last date for this, and JCF and sir had helped us out to come out with this. And now I request CA Sukriti Ambol to introduce our today's speaker. Over to you, Sukriti.
Good afternoon, everyone. CA Piyush Sohan Rajji Chhajed, having an experience of 20 plus years and a senior partner at Messrs. Chhajed and Doshi, Chartered Accountants established in 1964 by late CA SP Chhajed, past president of ICAI. His specialization is in tax litigation and advisory. He is also specialization in direct and indirect tax appellate proceedings and arbitration proceedings, speaker on various topics of direct tax. He is also a member of External Advisory Committee of Reserve Bank of India for Asset Reconstruction Company 2019 onwards. In ICAI, he is a co-opted member of Central Council Committee of Strategy, Perspective, Planning and Monitoring Committee, ICAI 2019-20, member of study group formed by ICAI for revision of publication guidance note on tax audit under Section 44AB of the Income Tax Act 1961 into 2020, special invitee on Central Council Committee of Direct Taxes of ICAI 2018-19, co-opted member of Central Council Committee on Government Accounting of ICAI 2009-10, co-opted member of Central Council Committee of Board of Studies of ICAI in 2004-5. In WIRC also he is co-opted member of Direct Tax Committee of Western Indian Regional Council of ICAI in 2019-20 and 2021. He is also a subgroup member of General Committee of Western India Regional Council of ICAI 2007-8. He is also a subgroup member of Career Counseling Committee of Western India Regional Council of ICAI 2008-9. In 2012-13, he is a subgroup member of Capacity Building Committee of Western India Regional Council of ICAI. He is also a subgroup member of CPE Committee of Western Indian Regional in 2015-16, subgroup member of Professional Development Committee of Western Indian Regional Council of ICAI in 2017-18. In Chamber of Tax Consultants, he is a member of Direct Tax Committee 2019-20. He is also a contributor to the WIRC publication on Vivad se Vishwas scheme and reviewer of FAQs on charitable trust published by Jain Chartered Accountant Federation, Mumbai. He's having other engagements in the independent director in Wimplast Limited, Cello Group, honorary vice president in Jain Chartered Accountant Federation, Mumbai, honorary joint treasury Shri Vijay Himachal Suriji Kirti Stambh Ghanerio, Rajasthan. He is also a trustee in Shri Vardhan Jain Govindpur Samiti Tirth, Rajasthan, Jayabai Memorial Trust and Shri Jihu Lane Jain Sangh. Quite a detailed and very impressive biodata. So over to you, Piyush ji.
Thank you, Sukriti, very much. Thank you very much. Thank you, Dipti, for organizing this event, and thanks to JCF, and thanks to Jayesh Bhai for speaking great words for me. Jayesh is a very close friend and brother to me. Shanti Lalji Kochhar, the president of JCF, who has actually taken JCF from what level it was, and then Rajesh Ji Salot, who is also the chapter chairman, Niket Thakkar, and all the team of the Gyan Station for inviting me on this occasion. As rightly said by you, it's an ideal time when such an event should take place for a VSV scheme. As everybody knows, that 31st December is the last date unless extended further. For filing a declaration, though the payment time, we have a time up to 31st March. But for filing a declaration and opting for a VSVF, the last date is 31st December. And considering the time available, which is now almost another 10 to 12 days maybe. So it's a right time to bring this, give this seminar, and also to host it live on YouTube, where the people can actually access whenever they want. And I'm sure it will help. So I'll try to cover up my presentation on VSV, its eligibilities, its intricacies, certain important FAQs, because a lot of FAQs have come. And the FAQs have come in last, on 4th December also, which is just 2 weeks before today. So I will try to cover important FAQs which have been clarified wherever there was some sort of confusion. So they have tried to complete it. So I'll share my presentation on that, and I'll try to cover up those presentation on this. So as you all know, the scheme is called Direct Tax Vivad se Vishwas scheme. So as rightly the scheme speaks of, the word speaks of Vivad se Vishwas. So what the government is expecting from the assessees is that you resolve all your Vivad and actually be part of the Vishwas of the government. So government is ready to make Vishwas on you, but you please settle the Vivad. So it's a nice scheme with a nice theme. And obviously, as you know, Vivad se Vishwas scheme has come after a success of similar scheme came for the purpose of indirect taxation. There was a scheme somewhere in 2017 when GST was coming in. So there were also a lot of disputes, a lot of tax disputes in service tax, income tax, excise duty, sorry, not income tax, service tax, excise duty, customs, and so on and so forth. Those laws which were scrapped after GST coming in. So they had come with a similar dispute resolution scheme, and that scheme was very successful. And I believe that success made government to think on a similar lines to bring in something of sort of for the direct tax scheme also. Obviously, this government is always the way the government is functioning since last 2 years, 3 years, which I'm looking at. They actually trust the assessee. The scheme is all about trusting the assessee. You come forward, you settle your vivads, you settle your disputes, and we will trust you. Yes, the trust is the most important factor between a government and between an assessee. A taxpayer is expected to be trusted by the government. If the government officers, bureaucrats, income tax department, or maybe the government per se, finance ministry, trust the taxpayer, the total atmosphere in the country would be different. And these are the such schemes which actually creates an harmony between the taxpayer and the government, which government is saying that yes, we do trust you. You please file a declaration, settle all your disputes, and we'll start with a clean slate. The trust of the government in the taxpayer is also, you can also look into it by the various other schemes, various other amendments which have been proposed. Just take an example, the assessment process which has changed. It has changed, like it's called faceless assessment. And really, believe me, the faceless assessment is being successful. It is doing well. My experience in Mumbai has been that there are this year already for the assessment year 18-19 where the faceless assessment has taken place. You need not visit, you need not know who the officer is, you just file details, give the written response, and you are getting the orders of the good quality. You won't believe it. It's my personal experience where you have claimed an exempt income of running into hundreds of crores, and the faceless assessment has been made and assessment orders have been passed today. When you have an extension available for passing an order up till 31st March, which was your experience in the physical assessment proceedings, that it used to run up to the last date and you keep on submitting details after details, and you would go mad and the officer would keep on calling details. But this all is over in faceless assessment. It's a limited point scrutiny. You give your response, matter is done. So what I'm trying to make a point, the government is ready to trust the taxpayer. It's a duty of the taxpayer to come forward, settle the disputes, and move forward in the life. As you know, the settling of the disputes, the time which takes place, time which goes in fighting with such a disputes is mind-blowing. It is always said, a businessman should generally do not litigate unless and until push comes to the straw. So the businessman should never try to litigate unnecessarily. If there are the chances available of settling those disputes, in my view, they should definitely opt for. I am not saying that unnecessarily because there is a dispute if the government officer does not accept a certain very genuine claims under the Income Tax Act and you do not dispute it is not correct. You should dispute it, but the dispute should be a last resort. If it could be settled by way of settlement mechanism which income tax has, it's a very welcome move because it would save a lot of energy of a lot of businessmen which can be concentrated on much better activities which are generating business, doing an economic activity. So accordingly, the scheme looks to be good. The scheme is good. So I'll start with my presentation. And as then we go ahead, I'll also try to clarify a lot of things. We'll keep on discussing. I'll keep on discussing various other issues which are involved, how it can be resolved, if any practical issues are there. I've also tried to cover with certain examples just to make it more simpler. So what the scheme is, as I said, when the scheme came? The scheme was announced by the finance minister during the budget session of the parliament, as you know. When the scheme was announced, the last date for filing the declaration was 31st March 2020, when you had to pay the tax dues on the disputed tax. That's all, nothing else. There was a 3 months grace period allowed wherein you had to pay certain additional tax, that is up to 30th June 2020. So the scheme was basically floated during the budget session with the deadline of 31st March 2020. Believing it that I am sure the government's intention to get the scheme during that period and giving the due date of 31st March 2020 was to meet the targets of the fiscal year 1920. Because the government was running short on time, they had a fiscal deficit funding upon them. It was important for them to create a revenue streams in such cases, and therefore they did bring this particular scheme. And they had a high expectation that they would be able to generate a good amount of revenue, which will make them able to address the fiscal issues which are there. But unfortunately, as we all know, because of the COVID pandemic, the scheme could not have taken up to 31st March 20. And as you all know, after a subsequent extension, time and again, now it has been extended technically up to 31st March 21 for payment of tax without any addition. But you need to file a declaration before 31st December 2020. The questions have been asked to me in various forums and various telephone discussions that whether this extension will happen or not. According to me, there is no need of technically any extension further because you are not supposed to pay any tax right now. Even if the tax is due, you have still a time of another 90 days. Till the time business improves. So government is quite aware that because of the COVID pandemic, there is a cash flow issues. And in such a cash flow situations, any particular scheme of a dispute resolution could have not been successful. And therefore, keeping this thing in the mind, they have extended the tax payment period also up till 31st March 21. So, but the question is whether why a declaration should be extended. I don't see. All the FAQs have come. A lot of clarifications have come. There doesn't seem to be much issue about it. But still, I feel certain people are saying that still we have not yet decided. So the question is, for taking a decision, you may not get an extension, and that extension should not happen also. So up to 31st December, at least government will also know that what are the number of declarations which have come. Number one. So, and therefore, according to me, the extension is not needed because you are only filing a declaration. You are not paying a tax. Even after filing a declaration, if you are not able to pay tax, you don't lose anything technically because all your appeals automatically gets revived on that basis. And if they have been already dismissed or they have been already withdrawn before making an application, then you can make a restoration application. So there's no point in having a further extension to it. At the same time, even if the public represents for an extension and the government feels that I should extend it up to 31st March. There's no loss to government also really. It's a procedural thing where a declaration has been filed. But please keep it in mind, our experience in BSV is very different. We have started filing the form 1 since last 2 to 3 months. But there is form 3, which is a certificate to be issued by the assessing officer of the tax calculation, whether accepting my calculation or giving his calculation, has not come. As envisaged in the act, they had to actually reply within the 15 days, but they are not able to. So possibly that is all the more the reason that the filing date of declaration remains at 31st December. 3 months they get a sufficient time to the assessing officer also for verifying those tax calculations and whether the amount payable under the act is correctly calculated and what it should be paid. They can actually issue a form 3 in time. So I believe if there has to be 90 days gap for making the payment and filing a declaration, because the assessing officer also has to verify those and then give a form 3. So as it stands today, 31st December is the last date, according to us. And I think so we should be, as a professional, most of us would be a professional on this platform. So as a professional also, we should try to complete it. I am sure, I know all the professionals are busy on 31st December with a lot of other things on the plate. Everything is today due on 31st December, whether you talk of GST audit 1819, whether you talk of tax audit, whether you talk of transfer pricing, or whether you talk of IT returns of an individual other than the audit returns. So I believe, so there is this issue may arise. But ultimately, this is a sufficient time, which I feel. What was the purpose of the scheme? I think so Dipti mentioned somewhere that there are 4.83 lakh income tax litigations pending before various authorities. Yes, this is what the government has declared. That in total tax litigations in the direct tax is around 4.83 lakhs. This includes at the various forums, which may be at the forum of Commissioner Appeals, at the ITAT level, at the High Court level, at the Supreme Court level. So 4.83 income tax litigations are pending. It may be from the appeals would have been filed from assessed by the SSC or maybe by the department also includes those. So this is the figures which has inspired the government that they should come with the scheme. So this numbers comes down if the matters are set. Second, they also got an inspiration, as I mentioned earlier, that is from Indirect tax Sabka Vishwas scheme. wherein also they had garnered a good amount of revenue, and a good amount of the numbers also came down by way of litigations, coming down or by way of settling it under those particular schemes. So this is the most important. As everybody knows, the purpose of the scheme always is, from the government side, would be to collect revenue with the least cost. Everybody knows for collecting the revenue by the government, the cost of government is very high. And a lot of times, even after the government succeeds in fixing the demand, winning the appeals, collection becomes very difficult. And a lot of government efforts are put on this to collect the revenue ultimately. And there is a cost involved as far as collection of revenues are concerned. This is the scheme from the government perspective where the taxpayer is coming forward, paying tax on its own. So practically, there is no cost of collecting these revenues, and therefore it's very good from the perspective of the government. Coming to the perspective of the assessor, as I explained earlier, it's very good if you are actually able to stop your litigation and you are getting a waiver of interest and penalty, and this efforts which you are putting on a litigations or a stress which you would be with because of the pending litigations, because of this pending contingencies, or because of the pending demands, possibly that time, energy, and resources can be put to some other productive use which can generate more business for you. No doubt a businessman would think that this is a chapter of my profession. My chartered accountants are handling it, and I am nowhere involved. So generally, they are looking forward to a chartered accountant that whether I should opt for this particular step. And that is where our role comes in. We need to verify. We need to actually explain that whether you should go for the scheme or not. You need to actually calculate the cost benefit analysis. What is the, if you lose, what would be the interest, what could be the probable penalty, but the interest is for sure in any case. So if the matters are, say, let's take an example, if the demands are pertaining to assessment year somewhere 14, 15 or before, I'm sure the interest component itself would be quite high, because it's a 13%, 12 to 30% interest rate, and 7 to 8 years the demand gets doubled. So anything which is beyond 4 years, 5 years, 6 years, I'm sure there is a lot of saving in the interest. Interest is confirmed. Nobody can waive interest. You're getting a waiver from the interest itself is quite a big relief. So as a chartered accountant, I would put to my client, that's what would be the cost of litigation. What if I lose? What if I win? Where do I stand? If I get a part relief, how much relief I would get? But still, though I may get a relief on the tax, but to the extent I didn't got a relief, that would be increased by the interest. And then also I'm hovered with the penalty. So as a professional, I need to give that benefit analysis. If I'm going for the BSV, what happens today? What is the cash outflow today? And then weigh that whether I should go for a BSV scheme or not. But in case, if there is a good cash flow available to a particular client, I think so, they should come forward and opt for the scheme and devote much more attention on the newer laws, the new schemes which are coming by the government. This is the current status, obviously updated on 17 November, and I also have got it from the media. And the government says that they have garnered to be 72,480 crores in this regard. Now, question is 72,000. I'm not sure how this figures have been calculated, but they say that 45,855 declarations have been filed. So there may be a situation where there is no tax liability coming under the BSV scheme, but this amount would be the value of the declarations, or the value of the disputed tax, or the value of the disputed additions. So we do not know. There's no clarity according to this. So, but they say they have garnered. So I believe that it may be either a disputed tax or actual cash collections, because a disputed tax would have been already deposited. There would be some litigants who would have already deposited a tax during the pendency of the appellate proceedings. So I don't know whether the 72,480 includes that. But the way the figures have been given by the media, I believe even if this is a disputed tax amount and not an actual cash collection, this scheme has already become successful. Just imagine that 45,855 declarations have been filed up till 17 November. Now, if you compare it to the figure of 4.83 lakhs approximate litigations, out of which 10% were already filed in declarations of 17 November. And generally it is seen in the last month, you will find much more declarations coming in. So if they are able to achieve even 25 to 30% of the total outstanding litigations, I think so the work is done. Further, I've been told, I have also read in the papers also that certain public sector companies are also willing to settle their disputes totaling to 1 lakh crore. Now, public sector companies, when we talk, as the companies like Indian Oil, HPCL, BPCL, Area, wherein the government is holding the stake. So those, I'm sure, of course, obviously they have the different criteria, and there could be a chance where the government would be insisting that these do settle the states and do filings. And of course, PSUs ultimately, because their master is the government, and they have to settle the disputes. But please mind it, when the PSU takes a decision, they also look into it technically also, that whether I should go for the scheme, because there are hardly any PSUs which are now 100% owned by the government, where the government can actually interfere. There are PSUs which are autonomous institutions, which means that there are also investments from the private sector. So if I'm settling any particular dispute, if I'm paying any tax and I have a good case, obviously they are answerable to their shareholders who are from the private sector. So obviously they will also look into the merits of the particular case and then take a call on it. But yes, there is a news that a lot of PSC companies are coming forward to settle the dispute. Coming to the subject, coming to the topic, with this background in the mind, let us understand to whom this is applicable. It's very simple. It is applicable to all pending appeals, whether it's before CID appeal, ITAT, High Court or Supreme Court. Those appeals should be pending on 31st January 2020. There should be it is also applicable to when there is only a fees, like a late fees dispute, or there is only a TDS or TCS dispute, or there is only an interest dispute or penalty dispute. So there may not be only a quantum addition, an addition of allowance or disallowance. There may be other sorts of appeals also, and those appeals will also be covered. So applicability is fair or more settled that there should be a pending appeal on 31st January 2020. Now, a lot of issues have come that what do you mean pendency? There are a lot of issues. Sometimes those appeals are pending, but they have been decided today. So then there are subsequent FAQs which have come, which when we take it forward in the other slides, I'll try to cover that. So eligibility conditions, again, it's applicable to those appeals. Eligibility, if you have filed on or before 31st January 2020. That is what I said, that it should be pending on 31st January 2020. But in case, let's take an example, an assessment order for 1718 was filed, was passed on 31st December 2019. Technically, you are supposed to file an appeal within 30 days with the Commissioner of Appeal, if you are agreed by that order, from the date of receipt of the order. Now, this 31st December 2019 order was received by you, say, on example, on 5th January 2020. So 30 days expires on 4th February 2020. So the time limit for filing an appeal has not expired on 31st January 2020. So though the appeal has not been filed on 31st January 2020, the appeal is not pending, but there is an order against you for which the time limit for filing an appeal has not expired, would be covered. So this had come in the later amendment. Initially, it was not there. After a lot of representations, because there may be a scenario where you have not filed an appeal, but the time period has not expired. Then the question arises, if the time period has not expired on 31st January, but it is expiring on 5th of February, and I ultimately do not file an appeal, even on 5th of February, whether I can still opt for an VSV scheme? According to me, yes, you can still file. So for all the assessment orders of assessment year 1718, which were filed somewhere in December, if your expiry date is beyond 31st January 2020, irrespective you have filed any appeal or not, you can opt for VSV scheme. So if there was an addition made and the time period has not expired on 31st January, you have paid the taxes, you have kept quiet, you don't know, but you can still go opt for the VSV today even after paying tax and get a refund of interest which you would have paid by way of recalculation of 234A, 234B and 234C. So it's like getting much more money. You're getting more money. You had forgotten this, you had paid taxes, you had kept quiet, obviously, because you never know the schemes will be coming. The scheme was first announced on 1st February 2020. So I didn't knew that any such scheme will come. So within 30 days, to avoid that I am assessing in default, because you have to pay demand within 30 days of notice under 156, you would have paid the demand, you would have slept it. But if you're technically from date of receipt, if it has not expired, you can opt for today, claim the refund also. Then this are in regard to appeals and writs. If your matter is pending before dispute resolution panel, then also you are eligible to go for the VSV scheme. If you have referred the matter and the direction has been issued by DRP, but no order has been passed. DRP is in respect of transfer pricing matters, wherein the assessee opts to refer the matter to DRP, and the DRP issues a direction, and post that direction, the assessing officer has to pass an order. So if your application before DRP is pending, you are eligible. If you have made an application, a direction has been issued, but assessment order has not been passed, still you are eligible. If you have made a revision filed a revision application under section 264 before 31st January 2020. So 264 allows the assessee to make a revision application before your commissioner. Let's take an example. You have filed an income tax return and you have forgotten to avail some exemptions, make some claims, which are beneficial to you. And now you cannot file the revised return because you know there's a time limit for the purpose of filing the revised return under section 139(5). Now that time has elapsed, but there is time permitted under section 264, which is generally 2 years. So you may make an application under 264 for making that particular claim of permitting some revisions. So that revisions file will also be allowed. Similarly, 263 application, which is the commissioner, if the commissioner initiates 263 and that is pending, that also can be done. As I said that this law came in February and this was amended. Initially, they didn't wanted to cover search cases. But after an amendment, they have agreed, the department has made an amendment wherein now search cases are covered. But only in case where the disputed demand is less than 5 crores for each financial. Please note. So if there is a search, there was a search, and your assessment, as you know, in case of search, an assessment is made under section 153A, and the last 6 assessment years are reopened, wherein you are allowed to file a return, and the assessment is made under 153A. So for each 6 years, you can opt for this particular scheme where the additions have been made, subject to disputed demand in that particular case less than 5 crores. And please note this 5 crores is for each financial year. So you may not calculate 5 crores for a block of 6 years. For each, so there may be in the 3 years, the demand may be less than 5 crores. In 3 years, the demand may be more than 5 crores. Then in that case, only in those 3 years when the demand is less than 5 crores, you can opt for the scheme. But in case of those years when the demand is more than 5 crores, you cannot opt. So search has been also included. Of course, there is a difference in payment of amount under the VSV scheme where the search is covered. It's 125. When it comes to that slide, I will cover up that. You file a declaration, what happens to you? Why should I file a declaration? That's the question which has generally been asked by everybody. I'll dispute it. Let's see what happens. I'll dispute it. Why should I pay tax? Penalty is a अच्छा case. Penalties I can fight it later on. Every quantum addition does not result into penalty. That's true. That's correct. Every quantum addition does not mean that you have to pay penalty. But please mind it. As I said, interest is sacrosanct. Supreme Court says that interest has to be paid by either of the parties to the claims. So even the department pays you interest if they collect a wrong tax, even the assessee has to pay the tax, pay the interest if the tax was short paid. So the interest is conclusive. So there are certain immunities which the government has given, which everybody wants it when they want to opt for a particular scheme, if they want to settle it, because it's a settlement. When there is a settlement, obviously something has to be, some benefit has to accrue to a particular settler. So what is immunities? The order passed by designated authority shall be conclusive for the matter in dispute and same cannot be reopened. So if you are settling assessment year 1780, there is a time limit to reopen that assessment for more than 6 years. Technically, they cannot be. No institution of any proceedings in respect of offence, penalty or interest. So there will be no fresh proceedings initiated for that particular year in respect of that offence for any penalty or interest. Appellate forums, arbitrator, conciliator, mediator not to decide the issue in respect of cases when an order is passed by DA. So if it is settled, order is passed by DA under section 5 of this particular DSV Act, then the matter is settled. So those cases will not be open. You know, there are a lot of matters pending with arbitrator, well-known matters of Vodafone, where the international arbitration is also open. So those cannot be reopened. Basically, that's the immunities. Other points. What is the other points which are relevant for this? Amount paid pursuant to declaration is not refundable. So let's take an example. You file a declaration, you do a tax calculation, a certificate is issued under Form 3 by the designated authority that this is the tax payable by you. Now, once the Form 3 is issued, you pay the tax, intimate the designated authority, and they issue a certificate of settling the dispute. Once the tax is paid, you cannot go back and ask the refund that was wrongly paid by me. You cannot. So this tax is not refundable. That may be, please keep in mind. But there can be another way. Let's take an example. Before filing a declaration, I do my calculation at home. What is the tax payable at the VSV? I pay tax today before filing a declaration. Then I file a declaration. Giving all the payments of tax decades. And I calculate that there is no amount payable now under the VSV scheme. It's a nil. So please an order be passed. So I file a declaration with a nil tax payable. He passes an order. Department passes an order under the Form 3 accepting my declaration, nil tax payable. So I'm not paying anything which is not refundable. My matter is over. Subsequently, laterally, you decide that I want to withdraw a declaration. There's no tax payable. I do not intimate them anything. I do not give them a declaration of withdrawing the appeal. What happens is your declaration fails. Once your declaration fails, whatever amount has been paid can be claimed refund. Once you succeed and order giving effects are passed. So you could do that way. So a lot of people are doing that. They are paying tax unless until they don't have a tax today to be paid. They are postponing it to 31st March. But some people are doing, they are paying tax as per their calculation and then filing a declaration. So there's no worry that anything is pending. CBDT may issue directions or orders to IT authorities as it may deem fit matters of collection procedure to be followed as necessary in public interest, remove difficulties. So CBDT has been given advocate power and we are seeing they have been issuing FAQs in this regard. No such orders to be made after expiry of period of 2 years from date on which provision of this bill. Of course, this is not relevant today because bill has now become act. Now the important point is what I have to make the payment, how much payment is to make. More or less it is settled in the percentage terms. But as a matter of refreshing, what should be the payment made? Because there is a lot of issues, a lot of apprehensions are being raised that if I do not pay tax up to 31st March 21, then the matter is over. There was if you recollect, there was a system of additional tax to be paid. If you don't pay, when the initial act came in, you had to pay 100% of the tax up to 31st March 20. And if you are not paying up till March 20, you have done time up till 30th June 20, wherein you have to pay 10% additional. Now, please keep it, that is still available to me accordingly. Though the last date, because if you see the act, there is a definition of last date given, which will be notified. Last date has not been notified. Therefore, whatever tax has to be paid, you have been given a time up to 31st March 21. And whatever additional tax, you will still have a time of paying an additional tax. That would be from period 1st April 21 up to the last date yet to be notified. So last date has to be notified. Let's take an example. They came with the last date of 30th April 21. So you will have those 30 days period available, 30th April 21, from 1st April 21 to 30th April 21, wherein you can still pay, go opt for the, if you have a Form 3 in your favor, you can still make a payment of 110% and still avail the benefit available under the PSV scheme. So that last date is there. So it's not that if I'm paying 100% up to March 21, matter is over. Now this last date to be notified could be 30th April or could be 30th June, like it was there earlier, which was 31st March 20 and 30th June 20. So in all probability, in my view, the last date may be notified at 30th June 21, where you get additional 3-month period of payment with an additional 10% to be paid towards the disputed tax. So there are two periods. You have to pay 100% of disputed tax only. Please keep in mind. There are a lot of confusions, a lot of questions. What happens to 234 ABC pay karna hai? 220 ka interest ka kya hoga? All interests are paid. Whether it's 234 ABC, whether it's 220. 220 is the interest which starts from the date demand notice is issued. It's under section 156. So that is also paid. 234 ABC is recalculated when there is an addition made to your assessment. So the recalculated interest has not to be paid. That's why I said earlier, if you remember, you can claim refund of those. If the assessment was made and I paid full demand under section 156. So generally when the calculation is made under 156, it includes recalculated 234 ABC, recalculated tax, and then the demand is raised. So if I deposited 100% demand and I'm still disputing the Indian appeal, you withdraw that appeal, you will get a refund of what is the interest portion, because you have to now deposit disputed tax on it. So tax differential, you are agreeing. It's a part of VSV. But whatever is the interest differential under 234 A, B, C, A ka to hota nahi hai, 234 B and C would be coming back to you as a refund. Initially, there was no refund prescription, but now there's a refund for it. If the declaration is made in respect of such case, thus 100 becomes 125%, 110 becomes 135%. Again, a full waiver of penalty and interest. Now, this full penalty, there are important facts which the FAQs of 4th December 2020, which has come, has changed also. When it made a full penalty, you may know that the penalty is levied for the concealment under 271(1)(c). Wherever there is a quantum assessment being made, there is also penalty being initiated. So that is a penalty which is related to assessment made or the disputed additions. There may be certain penalties which are not related to addition. Let's take an example. You have violated 269 SS and T provision. So there is a penalty under 271 D and D which are pending. Secondly, you had filed a return, but you didn't file audit report within time. So there is a penalty under 271A, 271B. You have filed a return delay, so there is a delayed, so there is a penalty. What happens to those penalties? Whether those penalty also could be made. Up to now, the way the law rates, way the act rates, there was a view in the fraternity that those penalties, because it's relation to same assessment, and ultimately penalty has been initiated after the passing of the assessment order, they should also be waived. But there is a FAQ issue. When we come, FAQ has been issued, which says those penalties which are not connected with the disputed additions will not be waived. So that's the unfortunate FAQ according to me. According to me, we should make an application for all penalties in relation to those here, and then look into it. But if they do not allow, then obviously you have no choice but file a writ petition, because the law reads it very clear, all penalties. If you do not have a quantum assessment, if you have only disputes in regard to penalty, interest or fee, fee is a late fee for TDS filing, late fee for income tax return filing or so, then you have to pay 25% of disputed amount only. So if your interest disputed at 201 for delay deposit of TDS, it's at 25% only. 25% is waiver. This 25% will become 30% when the additional tax comes in. So this is how the tax rate is here. Now, there is another, these are the cases, these are tax payable when the appeal is filed by taxpayer. So I am disputing the additions. Let's take an example where I have already got a relief from the appellate authority, maybe CID appeal, and department has filed an appeal before the ITT, before the High Court, before the Supreme Court. So there may, as of today, you don't have any demand technically. And I wonder whether the scheme will actually receive any applications under this criteria. There may be very hardly some applications where, though it is in your favor by ITT, let's take an example, ITT has decided in my favor because the position of the law and the position of other judgments were in your favor. But subsequently, in some other matter has gone to Bombay High Court. And that SSE has lost their case, which is applicable, the facts are similar to. Now, in my case also, department has gone in appeal. So I'm sure, I know that today, when my case comes for hearing on Bombay High Court will rely upon its own judgment and decide in the favor of department. So department will be successful. So in those cases, I've got a now opportunity. Okay, though I don't have a demand, I have an lower authorities ordered in my favor. Still, you can opt for BSP so that department's appeal, which is pending before the higher forum, gets withdrawn. And the risk that I would lose that particular case because of the change in the circumstances, change of judicial precedents, I will at least save 50% of disputed tax. Now, in those cases, I have to pay only 50%. And most important, waiver is of 50% of tax plus full penalty and interest. Everybody knows, but if the matter is pending before High Court and Supreme Court, that means you have already exhausted 15 to 20 years in this particular case. So if 15 to 20 years chala gaya, so interest and penalty would be very high. And if you lose, if you lose those cases, then what? Because day in, day out, the judgment keeps on gets reversed by the High Courts, by Supreme Court. So you should analyze this. You should see the position today, that though it is decided in my favor and department is enough, I should assess the situation. Like an auditor does when he determines the contingent liability in such cases. They do assess in the situation. What is the current position available? What is the current tax position? What are the current case laws? Whether I will lose those appeals. If I feel I will lose appeals, please go for this view. Though people may not go in very limited circumstances where the judgments are reversed, you can opt for it because you're getting a very substantial relief. Now again, this 50%, if it's a search, becomes 62.5 because it's a 50% of 125. Similarly, 12.5% if it's in relation to penalty, interest or fee because it's 50% of 25%. Now this all 50, 62.5 and 12.5 will be increased by 1.25%. That's 55%. Again, a 50% of 110, 50% of 125. That is within 135. Sorry, where you are paying after first April 20. So this is as far as what is the percentage of disputed tax to be paid. You know how the disputed tax has to be calculated. I'll try to cover with actual examples in relation to disputed tax, how to be calculated. Disputed tax is to be calculated purely on disputed additions. It's a straight, like if I say if I'm a 30% tax assessee, if I addition, I'll just go to other page. If it's 100 rupees addition, so 30 rupees is a disputed tax which I have to pay. Disputed tax in various cases. So I have tried to correlate certain examples in the presentation also for the benefit of the audiences. So it's, though it looks very simple, but I try to make it, you will also, if you want, you will find this, there is a publication of WIRC, which is on Vivad Vishwas. All those examples I have also included in that publication, which is available freely on the website of Institute of Chartered Accountants of India. So you will get most of these examples over there because it was contributed by me. Nevertheless, just to discuss certain examples for the benefit of the audience. Where an order in appeal has been passed on or before 31st January and time for filing further appeal has not expired on 31st January 20. So I have a time limit to offer the scheme. Now my return income was 70, assessed income was 70. So generally there is a disallowance of 10 rupees, some expenditure disallowance and under-reported sales of 50. So there is an addition made of 60 rupees in my case. So as per my return of income, 21 rupees was tax payable. As per assessed income, tax payable is 39 rupees. Please mind it. Now I am not calculating interest. 234A, 234B, 234C नहीं calculate करो. मेरे return income में whatever was interest payable, I have already paid it. A, B, C. Now when I am calculating assessed income, I have to ignore all those things. And what I have to compare is tax payable. Tax payable on the return income without any interest. Tax payable on the assessed income without any interest. I compared that and difference is the disputed tax, which has to be deposited. 100%, 110%, or 125%, depending upon what is the nature of appeal. So I have to deposit 18 rupees. In short, if you recalculate, my addition is 10 rupees and 50 rupees, 60 rupees. 60 rupees ke upar my applicable tax rate is 30, which again comes to 18. So that is how is this disputed. It seems to be, according to me, it seems to be quite clear in the circumstances. Now, where the appeal is pending before the CID appeal is on 31st January 20. That's second example. Now, there were additions made. I'm taking another example where I'm, because it's a pending, I'm contesting both 60 rupees. Now, I'm not contesting 10 rupees before CID appeal. I have already filed a CID appeal. And the grounds taken in the CID appeal, which was filed before 31st January, I have only taken a single ground, which is in respect of unreported sales. So I am contesting 50 rupees. I am accepting 10 rupees. So what happens is when I am accepting 10 rupees, whatever is the tax payable along with the interest on this tax and penalty if any may be payable, I have to pay it in full, which is immediately because it's not contested. You are withdrawing that appeal. Now once and on the balance 50, which is contested before the CID appeal, you can technically now only 50 rupees, that is 50 what is the tax payable is 50 rupees should be deposited. So I've done a comparison that if I actually contested, if I would have gone in this scheme, how much tax would have been payable by me, basically. So I am paying 10.08 on the full amount, which is not contested over here. And on that 50%, if I'm what relief I'm getting, I will be depositing only 15 rupees, basically. Now, this is a very important where disputed tax due to notice of enhancement given by CID. As you know, CID appeal has a very wide powers under section 241. I'll just take a break for give me a minute, please, sir. Sorry. So there are wide powers given to CID appeal. CID appeals powers are more than the High Court. Bombay High Court says that under section 241. CID appeal can pass any order as it deems fit. That's what 241 reads. He can pass any order as it deems fit. He steps in the shoes of assessing officer. He is also an appellate authority. He is also a quasi judicial body. So very wide powers. Wider than tribunal, wider than the High Court. So this wide powers, because he also is an assessing officer in a way, he can also make a fresh edition. So he can issue an enhancement notice during the course of CID appeal, stating that you had not made this addition, but after looking into the papers and the paper book, I am making this enhancement. It's like something aab el mujhe maar. So I didn't have some addition. I go to CID appeal and CID appeal starts digging into it and gets some fresh issues out of it and wants to make some addition. So he gives you a notice of enhancement. As per the procedure under 241, if he wants to enhance my income, when compared to an assessed income, he's supposed to issue me a notice before. Without notice, he cannot make an enhancement. So he issues me a notice of enhancement, and then CID is pending at that stage on 31st January. A notice of enhancement is issued. Now the question arises, what would be my disputed tax in this particular case? Whether, because my assessed income and dispute was only in relation to 50 rupees, but enhancement notice has been already given for 20 rupees. What should I do? Should I pay 70 rupees? Should I consider disputed income and disputed tax at 70 and 21 respectively, or only on 50 rupees? Our view was that enhancement notice should not have been covered technically. But unfortunately, an FAQ has come now very clearly that if the enhancement notice is issued by the CIT before 4th December 2020, that is the date when another circular new FAQs came in, then you will have to, that enhancement amount proposed in the enhancement would be considered as a disputed amount, and you have to calculate a disputed tax on that. If the enhancement and notice has been issued after 4th December, no tax is payable. So they are trying to be a fair if it is. But according to me, that's not a good law, because ultimately what was pending on 31st January, by issuance of notice of enhancement, there is no demand on me. There's no dispute has arisen. Because if the enhancement notice has been issued, it's an opportunity to you, which you may contest tomorrow before CIT appeal. And tomorrow CIT appeal may actually do not enhance only. So notice of enhancement does not mean that the dispute has already arisen. It's only a show cause. So at that stage, issuing this FAQ, according to my mind, is not there. But today FAQ is there. So if you have been issued already an enhancement notice, you will have to calculate tax on that before making BSV. We have seen a lot of such enhancement notices, most importantly, and that's why I'm making this point in Mumbai. In a lot of editions wherein the similar editions have increased the enhancement, where the percentage additions were made, they made 100% additions relying upon some judgments of some particular tribunals or high courts. So what happens is, so now you cannot go because your enhancement has been such a high and you may have to pay tax on that. So that is how the situation is. But after FAQs, you can't help it. If you want to challenge it, then you please make an application. Do not calculate tax on enhancement amount. If it is rejected, you have only option left is to go to the writ, because the law does not speak about that. FAQ cannot override the law. When disputed tax due to appeal disposed of by ITT and pending before High Court. So how do you do? So ITT has disposed of the appeal and it's pending before High Court. Now there was, if you remember, there were two additions. One is 50 rupees addition, which I was contesting, and 20 lakhs enhancement. So appellant is 70 rupees. ITT granted a relief of 40 rupees, but a balance 20 lakhs and original 10 rupees. 30 rupees is a disputed income now. Relief has been granted, so 30 rupees. So if I'm paying a tax on that, I have to pay 9 rupees on 30. Now I have a choice, because ITT has given me a 40 rupees relief. Department has already filed an appeal before High Court. So we both are in High Court. I am in High Court contesting 30 rupees. Department is in High Court contesting 40 rupees. So what should I do technically? I have to pay 100% of the disputed tax on 30 rupees, 9 rupees. And I have to pay 50% of the tax, disputed tax, on this 40 rupees, because it's in my favor and department has decided. But as I said, I wish that even the department appeal should be withdrawn, because possibly there may be some judgments post ITT order which are not in my favor and I am worried about it. So I want to settle this also. Then in that case, the disputed tax on 40 comes to 12 rupees, which I have to pay 50%, so it's 6 rupees. So if I want to settle both the appeals, I pay only 15 rupees. That's all. 9 plus 6. I have a choice. I may settle my appeal and do not settle revenue appeal. I may not settle my appeal, I may settle revenue appeal. So I have a choice. I can decide either way. Now this is a similar case where 3 and 6 same calculation. I'm just for a success that appeal has now moved from High Court to the Supreme Court and same is pending. I got some relief granted by High Court, so we both are in appeal. So in case of my appeal, I have to pay 100%, and in his appeal, I have to pay 50%. So it's similar facts, no change. Only the authorities change. Disputed tax on search operations, technically the same as we had discussed earlier. Only thing is you have to just add it to 125%. Your tax is 1.25 of what is a disputed tax. So if you see in this example, search operations addition 70 rupees is the return income, assessed income. And in case of search, income was assessed earlier, but after that search has happened and 50 rupees additions have been made. So on this 50 rupees, my tax payable has increased because of this by 30% from 21 to 36. Disputed tax is 15. So if it would have been the normal assessment, I would have paid 15 rupees but it is a search, so I have to pay 80.75 rupees, which is 1.25 times of the 50 rupees, or I would say 125% of the tax amount, whatever it is. So these are the basic calculations which I try to cover it. Now there are certain cases which are not covered in the scheme, which you cannot apply if for the pending matters in regard to this. As I said earlier, search cases where disputed tax is more than 5 crores per year. I have already discussed it applies per financial year. Certain years you can go, certain years you cannot go. Prosecution cases under the Income Tax Act or IPC filed by the department. So if any prosecution cases has been initiated, last 2 years, 3 years, there were huge number of prosecution cases. My personal experiences in Mumbai is that there was a target given to every ward that they should file minimum 100 cases of prosecutions. And department was filing prosecution left and right, where you had even in the salary department, where only the salaried people's returns are processed, even they had to make 100 cases. So they were selecting those cases where the returns were filed under 139(4), that is belated return. If you read provisions of section 276, if you file a belated return beyond the period of end of the assessment year, prosecution can be initiated. But nobody was actually using this provision. Nobody was actually, though there are a provision in place which has not been amended and it's continuing in the statute book, unfortunately. But those are fine. Now in those cases, for those particular financial year, where the prosecution cases have been initiated, you cannot opt for this particular scheme in respect of any addition made for that particular year. Only for that year. That has been now clarified. That if prosecution is in respect of assessment year 15-16, you can still opt for any other assessment years as far as PSV is concerned. Cases relating to undisclosed foreign income and assets or cases completed on basis of information from foreign countries. So they don't want to give any amnesty. They don't want to settle anything with the people who have undisclosed foreign income and assets. So if you have an undisclosed asset, I would look at it that way. If you have an undisclosed income, but if it is in India, they are happy. They are ready to settle it. But you have an undisclosed income which is located in foreign, it's in relation to foreign income and assets. Sorry, government is not keen in settling. They want to fight it out and take the assessment to the task in those cases. Cases covered under the IPC. So if there is a tax assessment made pursuant to some criminal case filed under Indian Penal Code or because of some unlawful activities, then also you are not eligible. Or there are many more other acts wherein the cases are in consequent to say you cannot opt for this particular scheme, like NDPs, PMLA, Prevention of Money Laundering, COFE POSA, Benami Property Transactions Act, and Securities Act. So those are the cases which are not covered under this particular scheme. Refund of taxes paid, I have discussed during my presentation also. To be very specific, any amounts paid before filing declaration will be eligible for refund if, as per the VSC calculation, disputed tax calculation, the amount is deposited in excess. You will be eligible for those refund. But please mind it, there would be no interest payable under section 244A. If you go under if you don't file a declaration, if you have paid tax and you don't file a declaration, and the case is 100% in your favor if you feel, you can still continue the dispute because you will receive the amount of refund along with 244A interest. Whereas under the VSC scheme, you will not receive any interest under 244A. And this 244A actually starts from the date when it is deposited. not from the date of declaration. So you may receive a refund today. So you are losing interest from date of deposit to date of today. But if you succeed, you will receive interest up till from the date of deposit till the date when the interest is received. So that is what 244A. So refund of such excess amount would be the amount paid in pursuance of scheme is not refundable. We have discussed earlier. If anything is paid pursuant to the scheme where the declaration is Form 3 certificate has been issued, you will not get a refund. What happens when you have more than one issues are involved in appeal? So I have taken 3 grounds. There is addition under section 68. There is disallowance under section 37(1). Can I file an VSP scheme only in relation to 68 addition? Because I know my case is good on 37(1), I will succeed. They have unnecessarily disallowed small expenses, which they should not have done. So I will continue my dispute. Can you do that? Sorry, you cannot do it. That whole appeal has to go. You can file for some issues, the litigator cannot do that. You have to settle all the vivads, not only single vivad, I would say. If you have 3 grounds, you please settle all 3 grounds. One may be in your favor, but in one case you may have a good case, in one case you may not good. You cannot do, you can choose. Sorry. Cases of favorable decision at higher forum. Now, as I said, if you are, this is a very good thing. What happens is, now I am disputing the demand at ITAT level, and there is already on the same issue, there is a favorable decision available of some High Court or Supreme Court on the similar issue. So now, because everybody knows, in such a case, obviously assessor will not opt for a VSP scheme. Why should he deposit any particular tax 100 rupees? When he knows Bombay High Court is in my favor, then why should I will get a relief at tribunal level? Because the issue is pending and they have to follow the jurisdictional High Court judgment, or there is some judgment of Supreme Court. But if says still gives an option that you may pay 50% of disputed tax if you want to settle such cases, and do not wait for the relief, because it may happen. You may, so it's a case to case. If the judgment of Supreme Court is there, I would suggest that yes, you should not opt for it. Dispute it, you will get 100% relief. I pay even a 50% of disputed tax. But if it's a judgment of higher forum, being an High Court, which can be always reversed and reviewed by Supreme Court, and then you run a risk, then you need to take a call that whether I should opt that for and pay 50% of that, because judgment is available, though it's not in my case, in some others' case. As everybody knows, appeal has to be withdrawn. Initially, appeal had to be withdrawn when you were making an application. So when you were filing a declaration. Now you do not have to. When you're filing a declaration on 31st December, please note you don't have to file anything in relation to appeal to be withdrawn. So even if your appeal has not been withdrawn, your declaration can go on 31st December. Now it will be filed when the final certificate is issued. So the tax calculation certificate will come. In the next slide, I just try to cover that process. In case of reduction in loss, MAT, I will cover it separately. I will go it further down when it comes on MAT and unabsorbed depreciation. I'll touch upon the process. What is the process for opting for the scheme? So if I decide to opt for the scheme, what I have to do? It says taxpayer to withdraw appeal from appellate forums, taxpayer to also withdraw any proceedings for arbitration, conciliation, or mediation. This is under section 4(3). I am supposed to withdraw it, not at this stage when I am filing the declaration. Section 4(1) states that you have to file a declaration before 31st December 2020. This 31st December is an extended date. 4(5) states that you have to furnish an undertaking, waiving my right, direct or indirect, to seek or pursue any remedy or claim in relation to tax arrears under any law. So I have to file an undertaking that I will waive all the rights. I will not claim any other tax benefits or claims once this tax arrears are settled. Subsection 5(1) provides, subsection 1 of section 5 provides that once I file a declaration under 4(1), the designated authority has to issue a certificate within 15 days calculating the amount payable by the taxpayer. And after that, I have to deposit under 5(2), I have to deposit that amount. Initially, it was within 15 days from the date when this DA issues a certificate. But now I have given up in time up to 31st March 21. And along with the proof of those tax payments that I paid the amount which was determined by the designated authority, DA, I will also have to submit the proof of such withdrawal. And once I submit it, then the final certificate will be issued by the designated authority. So there are certain forms which are prescribed. Form 1 is form for filing declaration under Form 1. You file a declaration that I want to opt for BSV. Once this is along with Form 1, Form 2 will be filed, which is an undertaking waiving my all rights, claims, and remedies under for all those tax arrears. Once Form 1 and Form 2 are filed, the designated authority has to issue a Form 3, which is a tax calculation sheet. A tax will be determined what is amount payable. That may differ from me, what I had calculated, what DA has calculated. There may be a difference. Or if you accept the difference, it was my mistake. I would accept and pay the tax in Form number 4. Along with the Form number 4, where I am intimating the payment of tax, I now at this stage, I also have to give the proof of withdrawal of appeal. So now this may happen that if I'm not able to withdraw the appeal before filing the Form 4, I can send an email, or I can write a letter to ITAT, take an acknowledgement, and that also can be attached with the Form 4, stating that this is a proof for withdrawal of the appeal, though actual withdrawal has not happened. So something like that. And Form 5 is the final settlement of tax arrears, order being passed along with Form 5, along with the rate with Section 6. Authority will issue a full and final settlement of that particular tax arrears. So those are the forms which are prescribed by the law. Now, transfer pricing, there's a very specific issue. If you see transfer pricing, as you would be aware, let's take an example. There is some addition made on account of adjustments in transfer pricing. Now, there is a system of secondary adjustment. So, if transfer pricing, if I had some transaction with an international associate entity and a TP assessment has been made, stating that the amounts paid to a TP was in excess. So you should have, instead of paying 100 rupees, you have paid 110 rupees for the services obtained from international associate entities. So you please bring back 10 rupees and pay tax on 10. So you have claimed additional expense. So first is that this 10 rupees would be added to your assessment. So on 10, I'm paying tax. Now there's a secondary adjustment in TP which says that this 10 rupees would be treated as loan given or advance given to the international associate entity. So this 10 rupees, you should bring it back. Till the time you don't bring back 10 rupees, this 10 rupees would be treated as a loan and a notional interest would be calculated on that. And that notional interest would be treated your income. So you have to pay tax there on every year basis till the time this amount comes in. So this is what is secondary adjustment. So secondary adjustment and primary adjustments are both different. So once you accept the primary adjustments under a VSP scheme, pay the tax, that does not mean that secondary adjustment is over. You still have to bring both the tax back and pay, otherwise the notional interest will continue to be calculated. So that's a very specific to TP. I'll try to cover certain FAQs, which is important, which I feel, which I've discussed over a period, but I'll try to cover up as and when there are certain which according to these reports, of course, FAQs are listed. Can order by Honorable ITT be considered as favorable order as addition at 8%, show credit 100% is reduced to 3%, which is less than 5% for which VSP is obtained. So that what I'm trying to say, there are certain ITT orders wherein the addition, let's take, everybody knows the bogus purchase additions have been made day in, day out, and a lot of disputes are pending in relation to that. And there are certain ITT orders which are in favorable orders, wherein the addition have been sustained to 3% of the bogus purchase. Whereas in my case, the addition has been made at 8% or 100%, whatever it is. So can I treat this as a favorable order because it's in case of other SSC and pay less, 50% of the disputed tax? It says, as per second provision of Section 3, it says that when you are talking of the favorable order, it should be of the assessee only and cannot be in case of any other assessee. So if 3% I have got a benefit in some other year, then I can opt and say that I will pay only 50% only because 3% are the benefit, so there is a favorable order. Otherwise, this benefit would not be available. As per provisions of Section 246(1)(a) of the Income Tax Act, intimation under 143(1) an order of DCIT under 271(c) of is an order applicable. Now, this has been again settled by FAQ. I'll just to make a point. There is an intimation issued under Section 143(1). You are not assessed or no scrutiny has taken place under 143(2). No order is there under 143(3). Now, the question arose and there were two views that whether 143(1) is order. Of course, In my humble view, 143 was always an order. It may be called an intimation, but it was an order because a 143 one order or intimation, whatever you call, was an appealable before the commission. So if you were agreed by any adjustments made in 143 one intimations, and even after making an application under 154, which we see day in day out today, that no adjustment, even after making an application under 124, 143 actual rectification does not take place. There are many such issues, small interest calculation differences. There would be some mismatch between the returns and tax audit report, and the adjustments will happen in 143.1. You keep on writing, you keep on making an application on 124 with no unbill, no avail. So what do you do? Only option available was to you to file an appeal against that 143.1. So now, if the order is, if an appeal is pending under 143.1, whether the question was whether this should be appealable. FAQs of dated 4th December has clarified now. According to me, it was always available under the Act, but there was no drop-down menu available when you were selecting the order which is pending, under which section it is pending. Now I believe they are giving that from the safe field of engineering by selection, so there is not listed. But after 4th December, they have done that. So after FAQ has come, now they have accepted it. So you can file an appeal in short. In the facts of the on the disputed issue and earlier, the appeal of assessee was allowed by CID appeal. Against the same department went into appeal before ITAT. The ITAT dismissed the appeal of department on the ground of low tax effect. Now, there was already appeal in the previous assessment here, and the CID appeal gave you relief. Department went into appeal. Now, for department to go into appeal, there is a monetary limit. Department cannot file an appeal against any order which is in favor of assessee unless and until amount of tax involved is beyond a particular threshold. So, for going and filing an appeal before ITAT against the CID appeal order, the tax impact should be more than 50 lakhs. As far as department's appeal is concerned, similarly for High Court, it is around 1 crore. So, ITAT filed an appeal in earlier year, and that appeal was dismissed because of the low tax effect, but not on the merits of the case. Now I am opting for the same because there is issue in favor by CIT appeal, but ITAT order is not in my favor. Technically, I cannot have it because it was dismissed on ground of low tax effects. So question arises whether I should get the benefit of lower tax, that is 50% available. According to me, it should be available to you. You should pay 50% because the order of tribunal dismissing the appeal because of low tax effect is also an order. It's an unfavorable order. It will amount to order of appellate tribunal. Any order passed, even if the appeal is dismissed because not decided on merits, it's an order of the appellate tribunal. And the proviso of the section 3 is very clear that any order of the favorable order of the higher forum. So order of the appellate tribunal is available. So I will definitely pay 50% according to me. ITAT order received on 29 December 2001. ITAT order received on 29 December 2019. We have not filed an appeal before High Court yet. Can we still go for? I've covered that because for time for filing an appeal before the High Court is 120 days from date of order received. So your time had not expired before 31st January 2020. So you can file an appeal. Assessee had filed a rectification application under section 154, which is pending before AO. Now assessee filed VSV and AO rejected 154 question. Can assessee file appeal before CID appeal in November and go for the VSV? So my 154 rectification is rejected. Can I file an appeal today in November or December today and go for VSV? The answer is no. Because the rectification order passed by is not before the specified date, that is January 31st. If the order would have been passed before January 2020, and I would have not filed an appeal would have been pending on 31st January, that would be a deemed appeal. Now, there is no deemed appeal, nor appeal against the same exist, against the 154 order. So, the question of VSV does not have it. If the quantum is pending before CID appeal and AO pass 271(1)(c), can assessee go for VSV only for penalty? FAQ 8 of CBDT Circular 9 of 2020, dated 22nd April 2020 is very clear that no. If there is quantum appeal pending. You cannot say that I will not go for the quantum. I don't want to file VSV for quantum, but I want to file VSV for penalty, and I cannot take it. If penalty appeal and quantum appeal both are pending, then I have to file and VSV for the quantum appeal also. And it is favorable also, because if I am filing for a quantum appeal, I am getting 100% relief from penalty and I only pay 30%. That is a disputed tech on the disputed addition. So it really does not make difference. But in certain cases, what happens is, you have a good case on quantum and people feel that I should settle the penalty itself. So I'm getting 100% waiver. But that will not happen. You get a penalty 100% waiver only when you pay disputed tax 100%. Then only. If the original assessment order passed by AO contains a mistake apparent on record in one of the issues conditions, so calculation in the computation sheet issued along with the assessment order is incorrect. Can assessee file application under VSV scheme and simultaneously rectification application under 154 to the time limit for filing rectification has not expired as on 31st January 2020? Answer is yes. Assessee can make an application under 54 of the Act. Assessee should request the AO to pass the rectification order. After the receipt of rectification order, the assessee can avail the benefit of VSV on other issues which are pending before the appeal. So important is rectification application can be passed. So your disputed addition and disputed tax would be rectified. And hereafter you opt for the scheme pending on the pending grounds which are before the CITF. So wherever there is a mistake in the calculation or the computation of income because of computation done pursuant to an assessment order, you should make an application for rectification, get the demand rectified. Once the demand is rectified, then make an application under the VSV. Now the situation may arise that demand is not rectified before 31st December. What do you do? The only practical way is you please file the declaration. You are in a position to talk to your AO today. You talk to AO, okay, please rectify the demand, and based on that only, based on the rectified demand, please issue certificate in Form 3. They are doing it. Practically, they are passing a rectification order. And then, after verifying what is the demand of rectification application, based on that, they recalculate the disputed amount, disputed tax, and amount payable under the VSV. Then they issue a Form 3. So that's why also it is taking a lot of time. As I mentioned, they are not able to issue this certificate within 15 days. Taxpayer files a declaration under a VSV for a matter under appeal before ITT with an amount payable, say INR 15 lakhs. Designated authority while issuing certificate under Section 5(1) of Act determines the amount payable INR 20 lakhs. Taxpayer would not like to settle the dispute. What you can do? Can you do? According to me, yes, you are free to. If the calculation is not correct, he shall not settle the dispute. I would not. So for Section 4(2) deems that ITT appeal to be withdrawn from date when certificate is issued under 5(1). 5(1) is full and final settlement. In this case, what would be the recourse to taxpayer? Such deemed withdrawal of appeal since he shall not settle the dispute under the view. So in my view, the jurist can write to designated authority first to rectify the Form 3 and issue the fresh certificate. If he rectifies it and if he agrees to your proposition of 15 lakhs, fine, you pay the tax, intimate, and take a full and final. If he does it, according to me, your appeal continues. There is no problem. Such case which was not eligible for VSV in January as the demand in dispute was more than 5 crores. Subsequently, CIT appeal order has come and now dispute is less than 5 crores. So what happens is there's a CIT appeal pending on 31st January. So obviously your demand is more than 5 crores. So technically you are not eligible. But subsequent to 31st January 2020, you receive a CIT appeal order and demand, because you get some relief in that on certain doubts, the demand has come. Now, what will happen? Can I file validly get a certificate? According to me, no. Because it applies only to pending appeals on a specified date are eligible. So if the appeal is pending on 31st January, and if your disputed tax is more than 5 crores, technically you are not eligible. So it will not. Under what section of VSV Act is taxpayer not allowed to file VSV? If a pending appeal at specified date has now decided post 31st January 2020 against it. The scheme is very clear. This is a negative question according to me, that if the appeal has been decided post 31st January 2020, what is the fate of that and whether I can go to it? Scheme is very clear according to me. Appeal must be pending on this specific date. So once the time and has not expired, so if the time specified date remains the same, the appeal is pending. According to me, he may reject, but technically he should not. I am eligible for it, so I can go for the scheme. But if he rejects, then only the course available to you is the High Court. Question I've answered already, whether the 221 interest is of the Act also waived on settlement of the dispute. Yes, it is 221, 234B, 234C, A, everything is waived. Can one continue to dispute quantum additions and settle the penalty appeal? No, I have answered earlier. In case there is a difference in amount intimated by department, intimated by DA, and the amount declared by taxpayer at the declaration, what is likely to be remedy available to taxpayer? Will there be any scope for email communication with DA to explain the difference? According to me, he shall be able to amend his order under clause 5 to rectify apparent errors. FAQ 46 clearly says that. However, how you have to communicate is not mentioned. So technically, you may communicate with your DA through an email. I'm sure you will get a relief. It is happening that they are recalculating those differences. Eligibility of appeals before the cutoff date of 31st January 2020, but where the appeal has been disposed of by concerned appellate authority against the assessee after 31st January. So as I said earlier, if order is passed after 31st January 2020 and you have realized that I lost, so should I appeal for VSV because the cutoff date is 31st January? Should I go there? According to me, where the appeal has been disposed of by the concerned appellate against the assessee after will also be eligible, because that is the words used in the Act is very clear that it should be pending on 31st. What happens afterwards is not relevant. So in last 9 months, you could have tested it. If the orders are in your favor, technically you don't opt for VSV, and if it has been decided against you, today you can opt for VSV. So both the things are in your hand after, because it got extended. And of course, obviously, when the Act was made, this was not envisaged because it was a watertight dates. 31st March 20 and 30th June 20. So declaration was March 20 only. So they never expected such a scenario would come. If you recollect, during Feb 20, March 20, commissioners were not hearing on it. They were not hearing the appeals on merits. They were only trying to make a case, रुकिए मार्च आपको अगर जाना है इस स्कीम में तो चले जाइए. So they were not deciding any orders. But because of such an extension, now they are decided orders. So wherever you have gone already in against, I think so you have a good way of thinking it. Good, you can think that yes, I should opt for it. Eligibility of appeals filed beyond the cutoff date of 31st January, application for condonation of delay. So my appeals cutoff date was 31st January 2020. Before. Now the word says that appeal should be pending, or the last date of filing an appeal should have not been expired on 31st January. Now the cutoff date 31st January, I could not file for moreover reasons. And I have filed a condonation delay. What happens in those cases? Can I opt for a VSV? According to me, my view was always that, but fortunately now FAQ has also come, which is before 4th December 2022, has clarified that if the condonation of delay has been filed and the appeal is admitted before, if condonation of delay is filed before 4th December 2020, that is the date of last FAQ, and if the appeal is admitted, then obviously you are eligible. But now there is an issue. How do you know that appeal is admitted? There is no process of admission when it comes to the CIT appeal or IT appeal. There you directly go, and on the date of hearing, you directly argue first on the condonation and then you argue on the merits of the case. So how do you know that appeal is admitted or not? In the High Court and Supreme Court, there are two different processes. First, there is an admission happens. And once the appeals is admitted, after 10 years or 5 years or 20 years, depending in which High Court you are talking of, Mumbai, it may be another 10 years. Your appeal will be heard on merits. So there is a process of admission and there is also a process of hearing. But in case of commission appeals and ITAT appeals, you don't know that whether the appeal is admitted. So how do I know? According to me, once I file a condonation application before 4th December, I should treat it as an admitted and I should file an application under this. Let them say that it has not been admitted because there's no process. And if there is a query being raised at that moment of time, after filing a declaration, I may write to CIT appeal that this is a condonation. You please admit it. And let's take another example. I filed an appeal somewhere in February, March, April, along with the condonation application. In that condonation, those appellate authority has not come back on me. Otherwise, they should have come back to me for hearing on condonation. So they have not come back. That means it is admitted. So it will be treated as deemed admitted. According to me, you should file an application. Miscellaneous application pending before ITT as on 31st will be covered by VSV scheme. MA miscellaneous application is as good as a rectification application. So if you are agreed by an order passed by ITT and there are certain errors which are mistake apparent from the record, and those errors are there, you can make an miscellaneous application before ITT within 6 months of passing the ITT order. If that MA is pending on 31st January 2020, what happens? Again, a clarification has come. If the MA is pending on 31st, is in respect of appeal, which was dismissed and limit. So limit means that appeal was dismissed completely. Such MA is eligible. Disputed tax will be computed with reference to appeal which was dismissed. So if your appeal was dismissed and the tax has to be calculated in that, you will get the complete. You can still opt for this particular because MA is pending. Though MA is not treated as appeal, the time limit for filing an appeal to the High Court does not start from date of passing an MA order. Please note. It starts from the date when the ITT order was passed. MA order is not appealable. MA order can be challenged only by way of writ petition. But still, this FAQ has clarified because in that appeal, the appeal was dismissed in limit and MA is pending, you are given a benefit that you can appear file for a declaration under PSV. Whether the assessee is eligible to opt for Vivad Vishwas, where prosecution has been instituted due to defaulting TDS, not for that particular financial year. We have read that. If it is for any other particular financial year, I can opt for those financial year where the prosecution has not been initiated. Enhancement notice issued by CFT after cutoff date of 31st January. So earlier, as I mentioned, the circular dated 4th December 2020 is not at all fair. Any enhancement notice issued, in my example I have calculated, will be considered as for the purpose of disputed addition and disputed tax, and you will have to pay. But to ensure a fair play, they say that if any enhancement notice is issued after 4th December 2020, in this next 26 days, then they will not consider for the purpose of disputed tax. Please do not. I think so. This is not correct. Enhancement notice should not be considered irrespective once it is after 31st January 2020. And not even before, because there is no demand till the time enhancement notice is there. Enhancement notice gets converted. It's only talks of enhancement notice. But anyways, this is an FAQ. But the law, according to me, as per the law, enhancement amount in the enhancement notice should not. If the designated authority does not accept, and he cannot accept because of the FAQ which is binding on him. Then an assessee has raised an additional ground before an appellate forum, which that whether disputed tax would also include tax in respect of such issue raised by additional ground. So there are 3 CID appeal passes an order. Out of the 3 grounds, he decides 1 in my favor and 2 against me. While filing an appeal, instead of filing and taking both the grounds of this 2 issues which are against me, I only take 1 additional ground and I concede to another additional ground. I don't file it. No. Now, because the VSC has come, I file an additional ground and I include that ground also, which I had not taken when the Form 36 was originally filed. Can I get a benefit of VSC on that additional ground? Or that would be considered additions. According to me, you could have done, but FAQ says no, so you cannot do it. FAQs has very clarified, it shall be considered if it has been filed only before 31st January 2020. Then only it should be considered. So your additional ground, so if your appeal is 2 years back and additional ground has been taken before 31st January 2020, then only you will get the benefit. Then you will get the benefit complete. So before knowing about the scheme, technically what the government wants, it should be a genuine, it should be a fair. So before the scheme coming in, you should have taken all the grounds and all this ground should be pending. You should not take a new grounds once the scheme has come just to get a benefit under PSV. That's the intention. Another FAQ which has come again is very challenging for me, according to me, because as I said, it says that when the quantum appeal is settled, all the penalties also you get a waiver from the penalty. But now it has been clarified in one of the FAQ that you get a penalty waiver only in relation to the penalties which are related to assessment. That is 271(1)(c), which is directly connected to quantum assessment. It's for underreporting, misreporting. Initially, it was for concealment. Now we call underreporting, misreporting. So what happens to other penalties, which are non-filing of tax returns, non-filing of tax audit report, non-filing of TP report, the violation of 216 SSP, and when they have used FAQ, they have only mentioned 271B, BA, DA of the Act, etc. They have not mentioned all these sections. There are many other penal provisions like 271B, 271E is for violation of 269 SSNT. If you violate SSNT, you pay penalty under B and E 271. Those have not been included. But the logic behind this circular is that, what according to me, is that only penalties in relation to addition made. This particular additions of non-filing tax audit report, etc., are not in relation to those additions, and therefore you will not get appeal. Obviously, these are the penalty appeal. I'm sure this penalty appeal will be applicable. You can still go for a, if these appeals are pending, you can still file a declaration for this, but in those cases, this will be treated as independent and you will have to pay 25%. So if you are settling quantum assessment, waiver of penalty is only up to the extent of 271 months. Other penalty appeals is a separate application to be made and paid 25%. That's what this circular clarifies. Subsequent treatment of this is the most important clarifications, and this clarification has come, I'm sure, because we chartered accountants, professionals, tax advisors are starts discussing that what happens is if I'm going for a VSV scheme. Let's take an example. There is an addition made under Section 68 of share premium. Everybody knows share capital, share premium, and I pay tax on it. I settle this under the VSV scheme. As an auditor, as a chartered accountant, what you would do? What entries would you pass? Obviously, the next impact would be, okay, now this has become my share capital. This is my capital. Because, or whatever the share capital I have wasn't from an undisclosed sources, or I could not justify the existence, I should transfer it to my capital. It becomes my capital to whomsoever the addition has been made. So a lot of things are there. There were some fights. There were some grounds of additions made for loans. Now, whether these loans I can transfer it to my capital, because I have considered under the VSV scheme, I paid tax. So the views which were taken by the fraternity all over the period, and people were thinking, ये तो amnesty है. मेरा कोई unsecured, there is an addition made under 68 of unsecured loans of creditors. Now I will transfer it to my capital and pay only 30% tax. I get a full waiver of interest and penalty today. And this matters are 8 years, 10 years old. So if I am making a capital, I'm building a capital today by paying 30% tax, and everybody is happy to pay 30% tax without interest penalty. But the government also realized that such discussions are going on in the fraternity, and they came with this. What they are saying, it has been clarified in the CBDT circular that BSV scheme is not a tax amnesty scheme. So it's not a tax amnesty scheme. Loan नहीं रहता. And as such, the assessee can't make entries in your books of accounts by crediting such unsecured loans, capital, PVM in capital reserve account. So ये आपका पैसा नहीं होगा. It will not be your money. It will remain loans. But my friend, when you yourself are saying that these loans are ingenuine, the parties are not available, they are not responded to 136. After paying tax, whom should I refund? What an auditor will do? Should I continue this credit in those dummy names if those are not available? I think so. This is not fair. But anyways, this FAQ is there. According to me, this does not affect the VSV scheme. It will affect the post VSV scheme when I actually make the entry in the books of accounts. So let's take an example. I opt for a VSV scheme today. I accept and pay taxes, though I'm not considering that addition, but I pay taxes on those unsecured loans, which were Section 68 addition. So my but natural would be, as an accountant, I would transfer those amounts to my capital, obviously. Now, what will happen is when I transfer this entry in financial year 2021, next year, again, because of this FAQ, ITO will come and say, you've made this transfer entry from loan to capital, you pay tax. It's a capital introduction. Why should I not invoke section again? What should I do? Because this FAQ says, because you have paid tax in the VSV does not mean your capital. According to me, ITO's stand will not sustain the scrutiny of the law. This FAQ is not correct. We should be able to take it because there's no other recourse available. If I'm accepting it, though I'm not considering the additions, but ultimately this amount obviously has to be adjusted to capital. So you're trying to make a case that I will refund the unsecured loans to somebody else. And also I will not be, I will also have to pay the taxes. So it's like that. But anyways, they have become more cautious and they brought it. Obviously, again, a plethora of litigations would be there if such transactions are being done by the assessors. Again, another FAQ is in relation to what will be the amount of tax credit if the payment of amount on settlement of Section 201. Now, everybody knows Section 201 liability is for non-deduction of TDS. So you have to pay the tax also and you have to pay interest also. Now, there is an appeal pending and you go for a settlement under VSV scheme and you pay 100%. So there's a clarification issue. Whatever tax I'm depositing by way of TDS today, the credit should be given to the tax deductee in the hands of the deductee. And that's where they came with the clarification. Now the question arose that if the demand under 201 arose because of search, and you have disputed higher amount because of that, of the search case, that you have deposited 125%, or you have paid tax after 31st March 21, and that's why you have deposited additional tax 110%. Question is whether the credit to deductee would be of 100, 110, or 125. It's a very simple. This is logical, very well clarified. The tax credit आपको 100 का ही मिलेगा, because 10 and 25% is towards compensation of penalty for delayed payment or because of the search. It's not actually a deposition of tax. Tax remains at 100 rupees. So the deductee will get credit of $100. Unabsorbed depreciation. Let's take an example. In case where the assessed income is a loss or the brought forward loss, unabsorbed is more than assessed income. So I have returned, I filed a return of income, and after making the addition also, there remains the loss on it. Unabsorbed depreciation or loss, you can treat it both. And I want to offer VSV. So what is the course available? So I have two options available. If I have my return income was 100 rupees loss, after addition the loss has become 50 rupees. So what should I do? Because it gives you two options. You may offer carry forwarding of the lower tax by going into a VSP. Okay, now my carry forward unabsorbed loss or depreciation will be not 100, it will be 50 as per the assessment order. Or if I want 100 rupees to be carried forward, then I treat this 50 rupees as a disputed amount, and on that I pay the tax calculation and I pay the disputed tax on this 50 rupees. So I have an option available. It's quite obvious that if those unabsorbed loss and depreciation has been adjusted by me in the future years, I can opt for paying tax on this disputed at 30%. Or if it has not been adjusted till today, then I may opt for reducing those depreciation and tax itself. Similar provision is available to a MAT credit. So if any additions has been made, which actually reduces the MAT credit available in the future. If the MAT credit available as per the return has been adjusted in future, I should pay the tax equivalent to MAT credit on the VSV scheme. But if it has not been adjusted, I can reduce my MAT credit, which is carried forward, because it has not been adjusted. So that is what is basically calculation in respect. You have an option available. So these are the examples which I've taken for the MAT credit. Let's take an example. I had a 50 rupees was my income under computation and 150 is my book profit as per the MAT. So tax payable is 50 rupees, 27 rupees. So I get a MAT credit of 12 rupees in this case. Now there is an addition made to a computation of income of 30 rupees. So assessed income becomes 80 rupees. Now tax payable is 24. MAT, as you know, the addition made in the computation cannot be added in the MAT because the book profit is different, computation of income is different. So whatever addition has been made of 30 rupees is only added to computation. Based on this, tax payable has become 24. But I don't have to pay anything because I remain under the MAT. So as per the MAT, again 27 is payable, but my MAT credit goes down. Please note 3.75. My MAT credit has come down from 12.75 to 3.75. Now what should I do if this? I file an appeal for this disputed addition of rupees 30 so that my MAT credit of 12.75 gets restored if I succeed in appeal. Now I have a choice. Either I carry forward the revised MAT credit of 3.75, don't pay any tax under BSV, settle the dispute. Or I can do one thing. I can still make an application, pay the differential tax of rupees 9 and carry forward 12.75 as MAT credit. Obviously, I do pay 9 and carry forward 12.75 only when this 12.75 has been adjusted already by me in the next years. So that MAT credit has been already adjusted. So I cannot revise those. I cannot recalculate that. Otherwise, what will happen? Let's take an example. If I opt for the first option and carry forward revised MAT 3.75, then for all those years, subsequent years where the MAT credit has already been adjusted to the extent of 9 rupees, I will have to revise those. Anything about 3.7, and I'll have to pay tax along with the interest over there. So वहाँ पे tax भी pay करना है 9 plus interest also भी pay करना है. So it's better to pay 9 over here without any interest. Again, in relation to MAT, the case of assessee was selected for scrutiny and assessment was done under 143(3) by making an addition of rupees 55 lakhs to return loss of 52. So I returned a loss of 52, addition made of 55 lakhs. After that, assessed income become 3 lakhs. Assessee has a carry forward loss of 52 lakhs obviously and utilized rupees 8 lakhs. So I have utilized 8 lakhs out of that. So now as of today, I have an unabsorbed loss of 44 rupees, which is to be set off. Now I want to avail the scheme and I'm ready to pay 3 lakhs, which is a net income addition after the adjustment of loss. And assessee also ready to pay the tax on amount utilized for set off of loss. 8 lakhs in difference, I have forgot the balance and return. So question is whether I can do a mismatch, mix match according to me. So what I want to do is 3 lakh is my income. I will pay tax on that. Plus 8 lakhs I will utilize unabsorbed losses in the future years. So I will pay tax on 3 and 8, 11 lakhs. And 44 lakhs balance out of 55 lakhs addition. This 44 lakhs, I want it to be set off and reduce my unabsorbed loss. Can I do that? According to me, you can do mismatch. So I will pay tax on only 11 lakhs. 44 lakhs, I will ask them to reduce my loss. That's what. So according to me, it can be done. Thus, I will make pay on total income of 11 lakhs. The option of non-payment tax on 8 lakhs also available at the VSK. Non-payment can be more expensive. So if this 8 lakhs which I have adjusted, also I cannot pay tax today. And I can reduce the loss completely by 52 lakhs. And this 8 lakhs, I can pay in the next year, but that would be more expensive, as I said, because of interest outflow. यहाँ पे मैं interest pay नहीं कर रहा हूँ 11 lakh. So thank you very much on this. Very much thank you. And I think so there are certain questions in the chat box. I would try to cover up that. Is this scheme applicable to NRA? What if someone has received is the scheme applicable to NRA? It's applicable to everybody. Only your appeal should be pending irrespective of who it is. What if someone has received a CIT order for demand in September 2019 and same has been paid but not received a closure letter as yet? What if someone has received a CIT for demand in September 2000, same has been paid but not received the closure letter as yet? So what, you cannot go because there is no pendency as on 31st January 20. So if the demand has been received pursuant to CIT order, as mentioned by Nilesh in the chat box, pursuant to CIT order, and whether you paid a demand, there's no requirement of closure order. Closure would be only passing an order giving effect and then doing it. That does not mean you can go for it because there's no pending appeals on 31st January 20. Sandesh Gunde Charles. Sir, as per answer to FAQ number 2022 of April 20, where initiation of prosecution has been issued without prosecution being instituted, assessee is eligible to file declaration, right? Where to file such a declaration form 1 as there is no specific line item for such case, thanks. Where initiation of prosecution has been issued without prosecution being initiated. So the question is, you are not filing a question of prosecution cases for that particular year because there is an initiation done, but instituted and has not been done. So you are eligible for that particular financial year. Now, what you are settling is some assessment order passed for the same respective year. So you will file as if a regular. This only determines your eligibility. Now, when you are filing for a VSV scheme, you will have to include that assessment order as if you are filing an appeal, filing an VSV for that assessment order or for CIT order only. So it will go in the regular course. There will be no mention of prosecution. It is only for eligibility criteria to be decided. It does not affect your forms. If there is an interest on late payments, TDS on salary, and we have filed appeal against the order with same whether we can file under scheme. Yes, you can. You can up 25%. Vishwanathji, you can pay 25% of it, and it's good there for you. You can do that. As I said, because late payment interest is calculated under 201 and that's specifically eligible. Gautamji, sir, how to take effect of prepaid taxes in Form 1 of VSV scheme? So there is a specific column in the Form 1 of the VSV scheme where the part C is the part B is information related to amount payable, where you have to say, and part E, I think the part E is information related to payments against tax arrears. So if the declarant has made any payment against tax arrears before filing of declaration, you have to mention yes, and then if yes, you can give the details of challan. Please make it over there. in that part E, there is also a sub column 2, small 2 Roman, wherein you can give the details of challan. So all those prepaid taxes would be covered over here. Again, there is also if refund claims. So there is a demand, and some refund of the previous years have been adjusted against that demand. That also you can mention under the sub column 4 in part E. So part E gives you enough scope to mention details of all the prepaid taxes. So TDS details also will be mentioned over there only with a BSR code. It should be included without BSR code. Now I'm not sure, Gautamji, that without BSR code your form will go or not, but it should be included in 2 only. I am not sure, Gautamji, on this that whether without BSR code this will be accepted or not. According to me, it should be accepted, and TDS details also should go in the column 2 only. I may revert to you on this if there is any issue on that. But according to me, because we are filing the TDS details also, and it's happening over there. Give me a minute, sir. So I'll get back to you on Gautamji. I'm not clear on that.
So there are few question answer sessions also.
In chat box, no?
Yeah, Q&A.
Q&A, Nilesh, Nana, I have covered it. Yeah. Now, Falguni Padiyas, I could see there from Falguni Padiyar. In the year 2011-12, company has received share application money from 12 different parties. Subsequently, share is issued to respond to share application money detail. In year 18-19, Income Tax have opened assessment for 11-12 under 148 on basis of bogus share capital for 3. Now, of course, if I go for BSV of 3 parties for whom assessment is opened under 148 and appeal is filed as of today, then my other 8 parties who have issued share capital in 11-12 can be open for assessment. Please note that for this balance 8 parties whom I have issued a share capital has transferred the share to other firm in year 18 and so according to me time bar of 8 days is not applicable as transfer of share is made in financial year 18-19. This guidance is of bogus share capital case. Is it advisor go for Vivad say Vishwas and from Vivad will not open other party assessment for this so assessment. There is no Falguni, there is no clarification that other parties case will not be available, but please keep in mind. They will not open it according to me, BSV. There is no clarification on that. Because you are offering for tax and you are accepting it, it does not make you have considered. It's a very clear, FAQ is also very clear, and that's why they have said that this bogus share capital cannot be transferred to your capital reserve. It cannot be transferred. Why they have clarified it, which implies that you are not accepting the additions. You are settling the dispute. You are not conceding to a position that these are bogus. These are not bogus. So based on that, they cannot open the other party's case in any case. Neither they can open your case in respect of other 8 parties which have not been added accordingly. So it cannot happen. You can go for the scheme. Other parties will not be harassed. They cannot do it. If they try to do it, it cannot be sustained under the law under section 148. Vishwanathji, there's one more. Whether 271(1)(c) initiation in 140 order will get dropped if we go for the scheme, whether yes, it will. Vishwanathji, it will. If the order is passed, then also it would be waived. And if it has not been passed because the time limit is still pending, order is before CID appeal, it will automatically all the disputes. So one of the dispute was on initiation of 271(1)(c) in the assessment order will automatically get settled. So that cannot be further. They cannot initiate any penalty. There is also a specific provision in this act wherein they say they cannot after for that particular year for that particular assessment they cannot initiate new penalty or new prosecution proceedings. Whether interest on late payments of TDS is allowed, yes, I have covered already. It is allowed.
Sir, the Sandesh Gundeja is raising his hand. Sir, I am unmuting you. Your answer is already answered, but
1 second. There are 1 or 2 further
yes,
quotes.
Sir.
Can I complete this chat box?
Sure, sir. Yes.
Give
please.
me a minute, and then I will take his hands.
Yes, sir. Please.
Gautam ji ka wo TDS ka issue which I have to come back that I have already told him. Now Shital Jain, additions by you have resulted in reduction. This you had sent me on email also.
Yes,
so
sir.
I think so. I have answered it in my FAQs also. If the assessee goes for what will the position with the loss before addition was utilized. So if you have utilized the addition, you have 2 options available. you can still carry forward that loss. Then what ITO will do, he will allow you to carry forward the loss, and you have opted for VSV, and you pay the tax today. But if you don't pay tax under the VSV and you want to reduce the loss carry forward, then your loss will be reduced to that extent. And all those subsequent years where the loss has been already adjusted will be opened up, and the tax will be demanded in those years along with the interest. Gajarji, following CIT order, demand and payment of tax plus and something that I think so we have already. Yes, you can do it, Gajarji. Following CIT order, demand and payment of tax interest, we file an for appeal to waive the penalty which is still pending. In that case, I can make is yes, you can do it. If the appeal is still pending, which appeal has not been imposed, if there is no order against you, you cannot do it. If the penalty order has been passed and appeal is still pending because of the time limit not appeared, but if there is no penalty order against you, then you can't do it. It would be an unfortunate Gajar sir, because आपका CIT order demand आपने pay कर दिया, so there is no further dispute pending as far as quantum assessment is concerned. Now coming to a penalty, it has not been imposed yet because there is a 6 months time period, so there is no penalty also pending against you as on 31st January. So if the penalty is imposed later on after March 20 because of extension available due to COVID, then according to me, you may not be able to go for COVID in that case. So Sheetal Jain. FAQ 50 special interest with making a legal shall not amount to considering the tax position. Yes, that's correct. It will not. Thank you, sir. Thanks. Okay. I think so. I've covered Dipti everything. So, any others?
So, Sandesh, two hands are raised. I would like to unmute them. Yes, sir.
Yeah, good evening, Sam. Sandesh Gundecha.
Please, Sandesh.
Thank you for your answer. So, to be very specific, now this initiation of notice for initiation of prosecution was under 276 EC, where we had filed late returns, though the tax and all was paid.
Right.
So now against that we had filed a compounding application, though prosecution was not initiated. So whether in this case we can go for the scheme, Vivad Savish, I mean.
No, so prosecution has been
under what
instituted, not but there has been initiation.
Sorry, I can't. Your voice.
So in this case, the prosecution has been initiated, but not instituted. If I am to understand.
Not instituted. Notice for initiation was received.
Right.
Where we were called for a hearing. I mean, it's called what a show cause notice that why proceeding should not be initiated.
Should not be initiated.
Right.
So there is no order. You cannot go against that. Because there is no order against you as of today. Let's take an example. This initiation is there, and in the same year there is some demand also for the tax, interest, and penalty also, right? And the prosecution is under the different proceedings under 276C. So if you want to settle those disputes, then you don't become ineligible. So this is very limited to this portion. You cannot settle those disputes in respect of pendency between initiation and institution of prosecution. You understood? So because of this embargo of initiation and institution will apply, will not disqualify you in respect of other proceedings for the same year, which may be in respect of tax deposition, maybe in respect of interest, maybe in respect of other penalties.
Okay.
Yes.
All right. Because this FAQ question number 22 was very specific regarding this.
No, that is because your eligibility. It's talking of your eligibility.
Eligibility. Yeah.
It's talking of whether you are eligible to go under VSV. So when you are talking of eligible, you have to go first of all which orders are eligible under VSV. So eligibility is of 201, 202, not 276cc order. And 276cc order is not that. So question of eligibility does not happen. So this, in your case, a bar will not apply for that financial year in respect of other orders, which are otherwise eligible.
Right. Okay. Thank you so much, sir. Thank you so much.
Yeah.
Sir, Gautam Jain, Gautam Jain, I'm unmuting you.
Yes,
Gautam ji, please ask your question.
Hello.
Yes, sir, you are audible.
Yes, sir. Good evening, sir, first of all.
Good evening, Gautam ji. आपका एक TDS का I need to revert back to you, I think so.
Yes, sir. Yes,
Anything else? Ask me. Yeah.
Sir, that was a question left for me.
According to me, TDS ka what happens is because when you are calculating, I'm not sure on this form aspect, but what now I was just wondering because when you are calculating the tax arrears, information related to tax arrears, and amount payable under the DATSV. So TDS credit would have been already given to you. So TDS credit or refund का तो आपका already calculation हो गया. Now what when you have calculated tax areas is only on a disputed addition. So you need not mention a TDS over there. If you have not received a refund to that, or you have received a refund, then the refund can be mentioned over here and can still be claimed. But Gautam ji, you can just ping me. You have my number. I will exactly give you how it is to be given to you. Because I also need to check with my office who is doing a daily filing on this, what they are doing. So
Okay.
Gautam ji, I'll come back to you to be very sure.
Can I ping my number in chat box?
Yes. So you have my number.
Or Gautam ji, you can contact us. We'll forward the query and make you directly contact Piyush.
So I'll just put it to my person who is actually filing on the hands-on. He will be able to explain you how to do it.
Okay.
So I think so. Deepika has raised one more question. I'll just try to cover that in the question QA. My case is for assessment.
Q&A.
Yes. My case is for AY89, and there is return business loss in that year. However, the loss has not been carried for now as time has expired. Can I apply for the scheme and put the return loss in form 1? Yeah, you should know. You should complete the matter. What if there is any addition and the impact was ultimately you had returned business loss and that business loss has been reduced, it has not been converted into demand, and those business loss you have not carried forward, not adjusted, then what's the point in it being getting payment? You should stop this and you are not making the payment. Your carry forward loss will go down. Let it go down. Doesn't matter. I think so. Your question is because you are not carry forwarded in the return. So technically it was never carry forward only. If I am understood that, but if your return was filed in time, then it's automatically, though it's not mentioning on the return on the face of it or in the column of the carry forward loss, still you can get that carry forward loss, and therefore you should go for the scheme and close the disputes.
Okay. I think all questions are solved now.
Yes.
Thank you, sir, for this such an enlightening, complete 360-degree turnaround session and covering everything from basics of laws to the point of view which department is holding for this scheme and covering all the FAQs. Now we are honored to have with us CA Puneet Mehta, sir, Treasurer, JCF Mumbai, and is the owner of Emitech Tele Solutions, a complete end-to-end solution company which provides customized solutions for your client. And here I welcome you, sir, in today's webinar. I request you to say a few words. Over to you, sir.
Thank you. Thank you, Dipti. And it's been really honored to listen to Piyush Bhai. On and off at JCF, we have been listening to him quite frequently. Just this year, we had a great session on startups from Piyush Bhai. So it's always a pleasure to listen to Piyush Bhai. I could not join at the start, but for last 45 minutes or so, I've been listening with rapt attention what Piyush Bhai has been saying. So fantastic, Piyush Bhai. Your knowledge for the law is really fantastic, and your attitude towards sharing is also just great. So on that matter, I would like to say thank you, a big thank you from JCF to you, sir. Yes, Piyush Bhai, you wanted to say something?
पुनीत JCF को thank you बोलने की जरूरत नहीं है, मेरी ड्यूटी है भाई. I've been a part
yes, being vice president of JCF and so yes, very much, sir. Yes,
sir.
Very much.
And Dipti is also part of JCF.
So with that, I would like
JCF
to.
is also what I am is Dipti is just JCF.
Yes. So
yes.
It becomes my duty rather than taking more of thanks. Be available to JCF any point of time.
Always, sir. And what we are is just because of JCF, and we all got connected. And other than beyond connection, the value creation which we get after being part of JCF, this prestigious organization, it gives us so much which we cannot count. Like, it's valueless.
Appreciate it.
Phenomenal what we get from JCF.
Definitely.
Yes.
It's a sense of pride for all of us.
Yes, sense of pride, and you can find your complete turnaround, a change in your life, everything. JCF gives you everything. And we are so proud of it and to be part of it.
Very much.
Yes. Thank you, sir, for today's webinar. Now I request CA Niket Thakkar to give a formal vote of thanks. And also I request all the participants to please take the life membership of JCF I have posted the link of JCF payment link for life membership website link. I have posted it. Be part of it. Just 1100 rupees is just a lifetime membership fees, which is very nominal for being part of this prestigious organization. I also request to please join the Gyan Station Telegram channel and subscribe to our YouTube channel, subscribe to the JCF channel, and be part of this knowledge sharing platforms. Thank you very much. I request Niket to give the formal vote of thanks. Over to you, Niket.
So on behalf of CA Deepti Ma'am and GAN Station team, I'm interested with the opportunity to give out a formal vote of thanks. Firstly, I would like to thank CA Shantilal Kochar sir, the apex president of JCF, for his welcoming speech. Secondly, I would like to thank CA Jayesh Kala sir for giving out a special address to all the panelists and the audience over here. Thirdly, I would like to thank CA Punit Mehta sir, treasurer of JCF Mumbai and a director at AimTech Business Solutions Private Limited. He's a well-known tele expert helping out people as how to optimally use the tele software. Now, last but not the least, I must mention a deep sense of appreciation for today's speaker, CA Piyush sir. Sir, through this webinar, you have really helped to clear out even slightest confusion regarding the Vivad se Vishwas scheme. Reading out and explaining FAQs and showing examples along with the technical provisions of the aforesaid scheme is what will make this webinar truly knowledgeable to our audience. Lastly, I would like to thank our audience for their participations and active engagement in question and answer session, and also attending this webinar even during this busiest season of ITR filing and tax. I hope this session was a very informative one to every one of us here. So stay tuned with us for further webinars. Over to you, Deepti ma'am.
Thank you, Niket, for this, for your words of appreciation. I just want to say that we are coming up with a webinar on labor laws covering complete 4 courts on 8th and 9th of January. So please join that webinar. Advocate Sudhir Gupta ji, the Supreme Court lawyer, is the speaker in that, and CA Govind Raj ji is part of this webinar. They are the speaker in this. So you can register yourself. We'll share the link soon. And sir, we have one more hand raised. If you are okay, we can take this question.
Yes, please, please.
Okay, sir. Sir, I have unmuted you. Ram Gopal ji. Hello. I think sir got some connection. Yes. It's okay. Okay,
you
so
can take a question and forward me. There's no problem.
Sure, sir. I'll mail you. Thank you for attending today's webinar, and thank you all of you for being with us. It's always pleasure to share knowledge and to interact with you all. And here we end our webinar. Good evening. Stay tuned.
Thank you.